out there. How's it going, Chris? Justin?
Good. Greetings.
Good.
Greetings.
Great to see you. Greetings indeed. Well, we are excited to present today some great strategies for short-term trades for active investors, and that is swing trading. And you know, when the market is choppy or down, or we're seeing quick rotations from group to group, stock to stock, having this short-term mindset can be very beneficial, Chris.
It's worked the best this year so far.
Absolutely. Okay, well, let's get right into it. Here's our agenda. We're going to talk about, okay, what exactly is swing trading for the uninitiated, some buying strategies to utilize, selling strategies as well, and some portfolio management tips, because we want this to be really actionable for you out there, not just conceptual. We'll take a look at a lot of great examples as well. So, Justin, what exactly is swing trading? I mean, it's in the name.
Right, exactly.
Yeah, you know.
Yeah, but what does it mean to swing, right?
Right.
So, basically think of it as this. You've got these short-term trends a lot of times, and in some ways, you're almost trying to get the heart out of the watermelon. A lot of times a move will be not all linear, right? It goes up, then it goes sideways, and it goes up, and then sometimes it goes down. So you're trying to get the big up move or down move if you're going short.
Or a quick up move.
Right, exactly.
Yeah.
And so there's a lot of, it's quicker in terms of, rather than holding on to something for weeks, months, you're on a shorter time frame.
Right.
And a lot of times we're using the same patterns because those different time frames do work. We're using the same patterns, but on a shorter time frame, and so you're only holding like for a couple weeks, a month sometime. But you can also turn it into something else, and we'll talk about that.
Yes, we will. Chris, I feel like it could be kind of like baseball, right? Instead of going for those home runs like we talked about with Jim Ropel earlier, this is more, you're bunting, singles,
Right.
doubles. Maybe it turns into a triple, depending on how things go. But talk to us about that aspect.
Well, certainly, a lot of times we're looking for gains of 5 to 10%, but there are times we've gotten 20 and 30% gains. And there are plenty of times where we're getting into a stock early, which actually really helps turn it into a position trade, and we'll give some examples there.
That we will, yeah, because those early entries can be really key, especially in this kind of market. The market dictates what kind of strategies to use. If breakouts aren't working, well,
Right.
maybe it is those reversals or those rebounds that we like with swing trading. So speaking of, here's a visual representation of what we are talking about here with swing trading. And so, Chris, let's talk a little bit about some of the buying strategies that we like to use, like I mentioned, so that you have breakouts.
Right, so breakout, from a regular consolidation, a cup with handle, a flat base, something like that. Those are excellent times to get into a stock, even for a short time. But then we're also looking for reversals, and the stock pulls back and maybe to the 21-day moving average or the 50-day moving average, and we'll jump on those there as well.
Yes, so back to that visual representation, because when you're looking at charts, you really got to be looking at the visuals, of course. So that first buy area there, that's your breakout. And then the other thing with swing trading, Justin, is selling into strength.
Yeah.
Not waiting to be on the defense to start selling, right? Locking in those profits.
And it doesn't mean you have to sell everything, but a lot of times what we'll do is we'll kind of go into thirds. We'll sell our first third once we're up a little bit, and then once we have a cushion, now we can kind of decide a little bit more, how do we want to handle the rest of this position? If it's continuing to go up, then maybe we use some of the shorter term moving average lines and say, okay, if it cuts one of these, then we'll trim it. But it does, getting that first third off the books and kind of booked as a profit, it does give you a lot of flexibility later on when maybe the trade starts going south. Well, because you took some off already,
Right.
you're going to be able to save the trade.
Absolutely. Well, let's take a look at some trade examples, swing trading in action. Here's a look at the wheat ETF, WEAT, for a quick move in May as a breakout example. So, Chris, let's have you tackle this one. So the first arrow here, we've got that breakout move, and what a strong couple of days this had. So a great swing trade.
Right, and this is a great example of a breakout move. There was volume, it started moving, we were taking profits into strength, and the great thing is We sold it, and what happened? It just kept going down. And
Yeah,
so
look at
if
that.
you were, looking at this as a position trade, you probably would have round tripped it, but as a swing trade, you got out with a nice gain.
Got a profit there. Okay, and also, so that's a breakout. Now what about a rebound? Here's a look at Range Resources, an energy stock, U.S. Explorer and Producers Group. So Justin, this is a good rebound example and a powerful move pretty quickly that this one worked. And why is that? What were some of the signals leading up in this setup?
Well, we have a line right there, and so you just kind of drew your line at the declining tops, and that kind of gives you a short-term trend, right? And this is a short-term style, so it makes sense to do a shorter-term trend over a few weeks. And once we broke above that, it's like, okay, this is something that could be actionable, and it just kept on going up very quickly. It's a little unusual that we're starting with 2 commodity stocks. That's that just is kind of the times
kind
we're
of year
in, right?
2022 has been.
Yeah, but we got that quick pop, and it was a quick follow-up to that too. But here again, we took off some of the profits into that strength, and then when it started turning, we were already out using those short-term moving average lines.
Exactly.
But it gave us a nice, quick 8.5% gain in just a few days.
Mm-hmm.
And once again, it
rolled over shortly after.
So again, in
get
this
in,
market,
get out.
And it came back, but it was like this. And so if you can do it right, you can kind of participate on the upside and sit out of the downside.
Right.
Absolutely. And so we talked a little bit about selling strategies, but let's dig a little deeper and put some numbers behind when we're selling into strength, those 5 to maybe 10% gains. But Chris, that can change depending on market conditions, because in this tough market in 2022, we've really wanted to preserve the gains that we've had,
Right.
and it's because stocks really aren't trending very well. So quicker moves, meaning quicker to take profits and taking what you can get.
Right. There are some times where we're taking the first profit at maybe 2.5%, and other stocks will move quicker. And we can tell from their past trading history what they're likely to do, and so we know if the average true range is 20 points for a stock, okay, we'll try to grab 15 of those points. But it really also depends on the market. And so right now, when we get a decent profit, and sometimes a decent profit is like
A
2 or
couple of
3%.
percentage points.
2 to 3%. It's like, oh, look at that. Let's take it
Let's
quick.
take it.
Yeah,
But
this
the good thing is, let's say it goes up higher, it reverses, it comes back to the buy point. You can get out, but the trade is still profitable because you took that first early profit.
Yes, exactly. All right, well, also selling on weakness, Justin, I mean, you mentioned some of those shorter term moving averages that you can lean on as some signals to continue to trim after taking that first profit into strength.
Absolutely. And so, again, because it's a shorter term style, we're not going to be necessarily gravitating towards that 50-day moving average line that we would for a position trade. We might use the 5 or the 10-day. And here again, it's going to depend on the market environment. There's some times where if you're trending a little bit better, then we can give it that room, give it the 10-day, maybe even the 21-day.
Right.
But if we're not, then we're going to keep it pretty tight to make sure that we're not giving up too much of our gain, and we're going to use the 5-day moving average line.
Exactly.
And we're also looking at intraday charts a lot of times, the 30-minute chart, sometimes the hour, occasionally for making buys, the 5-minute, especially when we're looking, maybe the stock shot up in the morning and pulled back, and we'll look for a reversal there.
Right.
But especially for selling on the 30-minute chart, you can really see a lot of recent supply and resistance area. And so, if it undercuts an area of support from the prior days,
Right.
we'll be getting out of it.
Some great information there. Also, of course, we can't talk about selling with that other scenario of what if it just immediately stops working, right? You think it's a good setup, and then it quickly crumbles.
Well, if you're
Or
going
you have a chance to even take some profits into strength.
right, if you're going to be taking your profits quickly, you also need to take your losses very quickly. You need to make sure that ratio is right. So one of the good things about reversals and some of these things, we're not giving them a lot of room. So sometimes if you go under the breakout day, then that's it. You're not getting 10% latitude. It's you cross that line and you're out. And same way with the moving average lines, we're going to use those shorter term moving average lines. And if we've got a gain on something, a good gain, we're not going to let that go negative on us. As soon as we start seeing it get into trouble, we're going to trim that. But the reversals especially do make it easier to have that line,
right.
And we can adjust our position size based on that risk too. If it's a smaller risk, we can go with a regular position size, but if it's a larger risk, a more volatile stock, okay, we can still take the trade, but we can reduce our position size.
Yeah, you have those different levers you can move there. Okay, well, let's take a look at some examples of selling. We've got Pfizer here, a good selling into strength example. Chris, so walk us through how this trade turned out.
It turned out really well. But what's interesting, and we know from our experience with position trading, that when stocks get extended above their short-term moving averages, they're going to reverse.
It's not sustainable, right?
Yeah,
At some point.
When you start going vertical, even over a few days, that's not going to last. And so, in fact, we have a great colleague who created an AI program that we can put in a ticker and it will analyze the stock and tell us, okay, it usually reverses at, let's say, 10% above the 10-day moving average or something like that. Usually what happens, we're looking at it like, boy, that looks...
Your spidey senses.
Yeah, the spidey
That's what I call it, right.
And then we go to the program like, yep, that's right. And so then we'll sell it.
Spider-Man, Clark Kent, your alter egos here.
Right, and so this is one of the few times where we were pretty close. Everyone says, did you top ticket? No. But we were pretty close on this.
Yeah, and we also have to look at a closer to a current chart of Pfizer here. So this is how the trade unfolded without you guys still in it, right?
Right.
So.
And again, once all that destruction happens without us, that's almost the better play, right?
Right.
Because then you can look at it and say, oh, look at how awesome we were, right? But you have to be careful that you don't get cocky. That masters of the universe.
Yeah.
Whenever we use that phrase, then it's like, okay, we got to be careful.
Exactly, but it just goes to show with some stocks, these shorter term plays can really pay off. And you mentioned not only is there AI that can help us signal how far a stock is extended from its moving average, but like you said, you can look at it visually. Is this normal or abnormal action in the past? Technical moves that breakdown that you can visually see on the chart.
Yeah, you just call up the chart and go back, months, years, and just say, okay, when
has it done this before?
Right. Has it done it before? When and how far was it extended when it did reverse like that? So you can basically do your own AI.
Yeah,
exactly.
and that's what we were doing before, right? We were just doing that visually and going to those manual spots, and then Praveen just made it easier for us to, oh, here, let me give you a few years worth of data in a few seconds. Instead of,
to confirm that. Okay, Justin, let's talk about selling on weakness. So here's a look at Ford Motor. So so there were some reversals off of highs and perhaps a warning sign, a bit of stalling there after a strong move higher.
Yeah, and we probably should have clarified that when we were talking about reversals, we were talking about upside reversals, right? Where you're
for buying.
For buying, where you're seeing a shakeout and then you kind of close at the upper part of the range. Now, on the flip side, you can see downside reversals, and that's where, and hey, if you want to look in today's market, you see a lot of those, right? Where you have strength, and then by the end of the period that you're looking at, you've got a lot of weakness. So that can be something, or it could be one of those things where you've got that initial pop, and then it just can't seem to make any more progress. And especially if you see some volume behind that, that's what we call stalling.
Right.
And it just kind of lets you know, hey, there could be a change of character here. Maybe that pop happened, and maybe it's better for you to just kind of take the gains that you have rather than trying to go for the big gain, because we don't want to give these a lot of time. We want to use that time value of money and say, okay, what else can we move this into that might be moving now?
Right, with all those rotations that we've been seeing. Well, now let's talk a little bit about portfolio management here. So what percentage of individual traders' portfolios should they dedicate to swing trading, Chris?
Some people, it's 100% of their portfolio. That's what.
Or more. In the right environment,
that's
right?
True. That's actually true.
Getting on margin?
Yes. So it just depends on your style and what's really good. For me, I like starting things as a swing trade and hopefully turning them into a position trade. So.
Yeah, and we have an example of that as well. So I think another thing to think about with portfolio management is you don't want to get too overly concentrated in one particular area. Like we saw, a ton of energy stocks performing well the first half of the year. Well, if that's all the eggs that you had in your basket, you want to have a little bit of diversification, right, Justin?
Absolutely. The risk management is critical to, I don't care what your time frame is, you have to have those risk management principles in place. And one of them is, if you're going to make a concentrated bet, there still has to be a limit. And sometimes that's a personal limit. Some people are a little bit more comfortable with a concentrated position in a sector or in a stock. Other people are a little bit more skittish, so you have to know what your personality is.
Mm-hmm. So I think also on that note, just to clarify a little bit more in terms of position sizing then. So how much, if in a trade, should I go with if I'm taking profits in thirds and thinking about that kind of thing? How big of a position or small of a position should I go with? I know, Justin, you talked about using some of those levers of where is it in relation to maybe a key moving average that you're keying off of, or looking at a prior price bar as your line in the sand on the downside. How exactly do you make that determination, Chris?
Well, for me, it has more to do with where we are in the market, how strong the market is. In a fresh bull market, I have no problem with 15% positions. Mm-hmm. Right now.
And then that makes taking profits in thirds pretty easy, right?
Oh, sure, yeah. And then in a market like this, even a 5% position seems a little, large
risky
at times. Yeah. And then you're faced with the question, well, it's only 5%. If I take a third off, really, is it doing anything? And that should also inform, like, if I only want to take small positions, why should I even be doing this right now? So, sometimes that just tells you more about the overall environment, and maybe the best thing is to step back.
Yeah. All right, well, let's take a look at one of these, how we turned, or how you can turn a swing trade into a position trade with maybe taking some profits into strength, and then once you have a solid gain, maybe leaning on more position trade rules to keep you in the stock, or help you know when to get out. And TBT, the ETF here tracking the 20-year Treasury bond short leveraged version here. Let's take a look at the chart. So back in April, we saw a strong buy signal for TBT. And Justin, walk us through that initial move that we saw.
Yeah, so when you're short the bonds, you're going in the same direction as the yields. And, hey, guess what? Yields have been
play on
going up.
rising
Right, exactly.
yields.
Yeah.
Yep.
So, no big surprise there, but, this was something that we put on, and again, it moved up very quickly in a very solid way, nice follow-up buying. It kind of told you immediately, you got that feedback, hey, you're on the right track here. Now, as a swing trade, you have that option, right? You could, as it pulls back, which is normal, you could exit the position, or because you got so much cushion so quickly, you can say, hey, I can give this more room. And I think I know someone at the table that was doing that.
Yes,
here.
I did make this trade, and I was able to turn a swing trade into a position trade here with this, Chris. So yeah, taking some profits into strength, and then adding on additional buy points. It's something that you can also do with things like this.
Right, and so that's where the swing trade can really be helpful. So let's say you take off a third, and now the thing is really working. It pulls back, you add that third, maybe even a little bit more, and now this becomes could become a really meaningful trade. In 2020, that was happening a lot, where we were buying things off of the 21-day, and then all of a sudden, you're up, 50% or something like that. Not in this market, but some
days.
Those days
we'll get those
return.
days again. Yeah. They will return. And then, so a sell signal that we've talked about throughout the conference in the IBD sessions is using that 50-day or the 10-week moving average, the red line on the chart here. That could be your final third, that final sell signal from a position standpoint if you're turning a swing trade into a position trade.
Right. Once you go to a position trade that you've got enough profit, then start looking at the rules that you would normally handle with your other position trades.
Well, and ideally, at that point, the 50-day moving average line has moved up enough to where you've got cushion still. You're still exiting the trade with a positive gain.
Yes.
Yeah, that's a great point. Okay, so let's talk a little bit more about strategies in 2022 here. So again, the general market will dictate what strategies to use. Is it the breakouts that are working? Is it reversals? Do you need to take profits extra quickly? Is it just a bunt, or can you go for maybe a double or a triple? So yeah, in 2022, we have been quicker to take those profits since the trends haven't been lasting. We've seen some really fast rotations from group to group. Also, let's talk about defensive stocks. We've been talking about a lot of defensive stocks and commodity stocks this year, so those cyclical stocks. So how do we think about those in terms of swing trading?
I don't think about them very and quite honestly, it's because, let's say some days all that's coming up on our screens are utility stocks. Okay, well, yeah, sure, they're setting up, but then you go to a weekly chart and they just go sideways. So it's highly...
It's not going to be giving you that outperformance,
exactly.
right?
It's hard to even maybe grab like 4 or 5%.
Yeah, it can happen, but pretty rare.
Right.
So maybe best to
You're not putting the odds in your favor.
But you know what? There's also this other element, because when we're taking profits into strength very quickly, and look, we redeploy that cash, right? We've got that. We want to redeploy it, but then sometimes it starts drying up. We can't find any place to put that cash into, and that kind of gives you a signal. This happened in February of 2020. We were like down to once, and we were looking, and we just couldn't find anything. And then the COVID crash happened. And so we had very little exposure during that because we had taken the profits into strength, and just,
nothing new was setting up.
we didn't have a place to put that cash. There was nothing that looked good. And
Same.
that's happened multiple times this time around too.
Right, and it happened in January of 2018, where that was a phenomenal month, and then it was a very rough next,
End of the year.
4 or 5 months.
Yeah. All right. So there will be opportunities in the future, right, for us to not just have those quick hits, but maybe to turn some swing trades into position trades and get those bigger moves
Right.
as well. All right. Well, do we have any questions from the audience as we look to wrap up here? Very thorough, guys. Thorough job. All right. Well,
How about on the virtual side?
Yeah, we might have one. Are you able to screen all the S&P 500 stocks so that I can identify which stocks are the best candidates right now for swing trading? That seems like a very large screen, honestly.
Right. So yeah, some screening tips. What are you guys filtering for? I know on the technical side, if you're buying off of a bounce on the 50-day or 21-day, well, you can screen for stocks that are close,
Right.
trading close
Right.
to those moving
That's
averages.
exactly what we do. It has to be the right price. It has to have enough volume behind it. And then we, within MarketSmith, we just say, okay, we want things that are within 2% of the 21-day line or 2% of the 50-day line. And then we put those two screens together and just start clicking through, and the setups appear, and sometimes they don't.
And let's be clear, when we're talking about these pullbacks and everything like that too, we're looking for stocks that are in uptrends,
Right.
that are pulling back within their uptrend. We're not looking for the pelotons that have been like so decimated. Oh, like this could be the bottom. We're not trying to do that. So.
Right. Very, very good point there. Yeah, goes back to that first visual that we showed.
Right.
All right. Well, thank you all so much. It was our pleasure to be here. Justin and Chris, nicely done. And yeah, we'll see everyone soon. We have another session. Justin and I are going to be back upstage with MarketWatch's Tommy Kilgore to talk about technical analysis. We're going to talk about candlesticks and lots of other fun stuff, patterns, time frames, you name it. We'll be here for it. So we'll see you then.
Thank you.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.